Safemoon is a rising utility token and digital money that is used to conduct decentralized finance trades. The Safemoon convention is governed by BNB Chain Circulated Record Technology, which has a market cap of approximately 148,054,349 and is intended for long-term speculation. Selling down to the end. A lot of crypto tokens fans are excited about what the future holds for Safemoon. Here you'll find an overview of Safemoon including its current price, a technical analysis, and an estimate of how much it will cost in the future if the Safemoon developers keep their word in the next 10 years. Safemoon is predicted to recover more than 1,000%. Many experts believe that SFM is a speculative asset because it has no intrinsic value. As a result, you should consider the risks associated with the venture. For example, the SFM coin's price movement is very unpredictable, making the Safemoon price estimate difficult to predict. People are unsure if cryptocurrencies and government-issued money will last in the long run because they are so new, but governments are beginning to understand what the effects could be. High uncertainty can allow people who invest money to speculate. Investors should be cautious before putting money into such a currency as long as the moon advances the money without relying on any intrinsic worth. Safemoon isn't backed by the major crypto exchanges, so liquidity can be an issue, particularly for traders. At the start of this year, Safemoon reached an all-time high, but its price has since fallen, demonstrating how long-term investments in such a volatile coin can be perilous. The Safemoon token is a popular choice among crypto enthusiasts because it takes 10% of the exchange cost and returns 5% to its consumers while adding the remaining 5% to the liquidity pool. Cryptocurrencies are dealt with by Safemoon V2 and Safemoon. Beach Security Moon V2 provided a sense of security. In terms of availability, protection, and convenience of use, Moon V2 outperforms its predecessor. Moving money between wallets costs $2, and purchasing a cell phone costs 10%. The spread has shifted as the additional 5% has moved. 2% of the coins have been destroyed. 1% of tokens are allocated to the development store, and 3% of tokens are added to the safe trading pool. CoinSafe Moon V2. The price of the moon fluctuated a lot at the start of last year, but around June, the Safemoon V2 price made a lower low, indicating a power change as soon as possible in the last half of the year. Fringe energy cost SFM a lot of power. Safemoon is a coin with a volatile price, as evidenced by the fact that the price of Safemoon V2 crypto reached a record-breaking high of about $0 in the third week of January this year, after which there has been a downward trend with a lot of uncertainty and enormous candles since the third week of January this year. Reserve funds and better protected wagers. Should you add Safemoon to your portfolio following the colossal price surge? A Safemoon is the greatest cryptocurrency to invest in for the next 10 years. If you want to look at it from a different angle, you can find all of the answers in the sections below. At the time I published this essay, SFM was trading for roughly $0. This level is a temporary support, but after such a protracted slide, it might also break through it based on technical indications. Backers should be wary of transient venture because the price could unexpectedly break support and continue to fall. According to our Safemoon price predictions, the chances of a rise are low even if there is a lot of online entertainment news about the Safemoon token. If investor confidence returns, it will face resistance around $0. Because SFM is so popular in the market, the price is expected to hit $0 by the end of 2023 based on how much we think the moon will cost. Based on what we know about how much Safemoon has previously cost, the average price of Safemoon in 2024 is predicted to be roughly $0. On average, the cost of a Safemoon may be less than $0. The market is extremely volatile, and many ordinary investors could do without it. Somewhat higher than where it was when the weekend began. BTC is down more than 10% since May 5, when it began its most recent plummet, owing to profit-taking and a lack of liquidity against a backdrop of industry-focused and macroeconomic uncertainty. Financial markets in general are driven by risk, by liquidity, and so, not surprising right now, when people are fearing risk assets as a whole, we're seeing large swaths of selling, Ryan Rasmussen, an analyst for crypto fund manager Bitwise, said on CoinDesk TV's First Mover program on Friday. When there is less liquidity, you will see larger price swings whenever an asset is sold. He did, however, add, there will be more liquidity come into crypto. Ether, the second most valuable cryptocurrency by market capitalization, was trading about $1,800, down a few fractions of a percentage point and roughly at the same level as early Saturday. Other big cryptocurrencies entered the green as the Asia trading week began, with Litecoin recently rising more than 5.7%. The CoinDesk Market Index, which measures the performance of the cryptocurrency market, was up 0.8%. The Nikkei was up around 0.5%, while the Hang Seng was down 0.2%. Rasmussen pointed out the decreasing correlation between crypto and traditional asset markets, which were uneven last week, with the tech-heavy Nasdaq Composite up marginally over the last 5 days, but the S&P wink with tongue sticking out 500 and Dow Jones Industrial Average, DJIA, dropping 0.2% and 1.1%, respectively. Any kind of mistrust in traditional financial systems plays into the hands of crypto, Rasmussen explained, adding, I'm happy to see the correlation fall between traditional risk assets, traditional equities, and crypto. Joe DePasquale, CEO of crypto fund manager BitBull Capital, told CoinDesk in an email that the current macroeconomic situation around the world is creating a conducive environment for crypto assets to thrive. This week, DePasquale expects Bitcoin's price to remain stable between $25,000 and $27,000 before bouncing toward $30,000 again. We don't believe the market requires a catalyst in the near term, he added. It is only a matter of time before we see another major rally. What does Bitcoin's recent stablecoin supply ratio mean? The stablecoin supply ratio, SSR, has dropped by almost 11% in the last 11 days, signaling a possible increase in buying demand for Bitcoin. The metric, which compares the market capitalization of Bitcoin to the market capitalization of stablecoins, provides insight into the supply and demand dynamics between stablecoins, used as a vehicle to purchase cryptocurrencies, and BTC itself. A larger SSR suggests that purchasing power is dwindling, whilst a lower value indicates that purchasing power is expanding. The recent dip in SSR comes after a 52% surge between March and May 5. The pivot suggests that more cash or liquid reserves have entered the market, which may result in higher BTC prices. Bitcoin, BTC, lost ground in the aftermath of CoinDesk's Bitcoin Trend Indicator, surrendering its optimistic bias for the first time in 3 weeks. Ryan Rasmussen, a Bitwise crypto analyst, offered his market analysis. Separately, Terraform Labs founder Du Quan